Boom. What's going on, guys? 360 Digital Closing Bell here for our week ahead podcast. I am your humble correspondent, Michael Tanner, joined by the executive producer of the show, the purveyor of the show, the director and publisher of the world's greatest website, oilandgas360.com, Stuart Turley. How you doing this morning?
It's a beautiful day in the neighborhood, but all right, I'll leave that joke alone. We're glad to
Yeah,
be here.
I'm glad to be here, coming to you here on this gorgeous November 2nd, 2020. Time stands about 5:56 a.m. So we'll be able to get this in before the market opens. Missed last week because honestly, guys, I think we're doing a little rebrand of the show here. I think we're dropping the Friday shows. Mostly because it's just a recut of what we do every single day, and I think they're worse. I think you should just, if you want to know what happened throughout the week, tune into our live show on YouTube every single day, 2 p.m. Mountain Standard Time. It's not really why we're dropping that Friday show. It's mostly because they run too long. We just kind of rant about news. I don't really think we actually learn anything from it. But really, this is more a push to go watch our YouTube show every day. If you want to know what happens, we push out summaries every single day. You won't miss it, guys. Check us out. YouTube. We're also on Rumble. I'm not even sure what that is, but apparently we're viral on Rumble. So I'm letting Stu handle that one until I see the checks come in. Then I'll become the Rumble king. But we have a great show for you guys lined up. We're going to chat a little bit. First, we have to celebrate Stu. He was the one that said oil was going to tank this week, and it did. So we'll have a little party for him and kind of break down why that happened. Some interesting stuff. We need to dive into ExxonMobil. I think there's just a lot of weird stuff going on with some of the numbers, and I think it tells a pretty interesting telltale sign about why some of these majors have shifted into renewables. Stu's got some stuff that actually is really good in the international news desk. But first, guys, this show is brought to us by the world's greatest website, oilandgas360.com, the place for all your energy news, all your energy finances, and home of the Energy News Beat, which is our live daily show every single day covering what's going on in the energy market. You guys won't want to miss it. Subscribe on YouTube. Check us out, iTunes, Spotify. We're available on the website, oilandgas360.com. Stu also runs the Energy 360 podcast, which is one of the top industry thought leadership podcasts. We've had so many great guests swing through. We just recorded one last week as part of our Women in Energy series with Susan. I'm going to burn this. Susan can you get me, Stu? Help me out, Stu. Farzaquad?
Yes, Farzad.
Lord Farquaad from Shrek. We'll just call her Susan Farquaad. But no, she's great. She's the vice president of government of communications and government affairs over at Great Western. One of the best interviews I've ever heard, just in terms of framing the whole ESG corporate communications to a relevant. I think a lot of the ways you hear ESG get talked about is honestly hokey. You know, it's pie in the sky. It's let's all build a fire, sit down with the environmentalists and talk about our feelings and figure out how we're going to, all get along. And really, I think the oil and gas industry has done nothing wrong. It's a messaging issue. It's not really a operational issue. She takes it as it's a communications issue. And that's really why I love listening to her. I know you guys are going to enjoy this episode. We'll probably get this out to you Thursday. Stu, who else do you have coming up?
We have Mark Mills. Interview him tomorrow. I'm excited about that. He is a fellow at one of the biggies. He is well published. I had to buy 4 of his books. He has been interviewed by a ton of people. He knows his stuff. I got to do homework tonight, dude.
You've got homework tonight. You've got some homework tonight, but we're trying to circle around a couple other people. We're actually interviewing ResFrac today. The guys over at ResFrac, if you're an oil and gas conference attendee, you saw their. So these guys are cool people. You talk about smart people. It's these guys. These are all Stanford nerds over there in Silicon Valley. But really, I think it's what the oil and gas industry needs. I think we're too far down the hardware rabbit hole. We need to start bringing it into the software, Stu. Too many people like you deploying stuff on wells. We need it all in the cloud. But
we interviewed Microsoft about that security. It was.
But also, and this is something. So you want to so we another guy we interviewed that we shot this on Friday. We'll release this week. What it was? CyberX was the name of the company. Who's the name of the CEO?
Paul. So,
Paul something. I forget his last name. We're bad with this stuff. Sorry, guys.
but he was phenomenal in his knowledge. We talked about national security with several things that have happened on offshore and the electrical grid. So this is a national security podcast.
Yeah, these guys got bought by Microsoft because really I think when people think of security, we think of like, oh, my online, I don't want to put something on the cloud because it's going to get hacked. And I think that's what a lot of oil companies started with for security. Hey, you're now trying to tell me I'm going to put all of my proprietary reservoir bubble point data, all of my you're going to tell me I'm going to put that on the cloud to get hacked by my competitor? Absolutely not. Well, companies came in and solved that issue, specifically the big boys, Microsoft, AWS. Because no, we don't get hacked specifically by your competitors. Maybe China, but that's a whole nother ball game. What CyberX did was come in and say, okay, there's a whole software component to this, but there's a hardware component to being hacked. And that's where these offshore rigs, these heavy machine-oriented processes in upstream, specifically in offshore drilling, can be susceptible to this stuff. So I honestly didn't even think about that. Who'd want to hack a button sitting on an offshore well, or an offshore drilling rig? Yes, people do.
Well, you've talked about it as a millennial that we do remote drilling now so much sitting in your pajamas instead of being on the rig. You could actually cause safety and environmental issues by blowing out a well remotely.
Yeah, no. So, highly fascinating episode. Highly recommend checking that out, guys. Energy 360 available on iTunes, Spotify, or the world's greatest website, oilandgas360.com. All right, the show today. A couple things. I want to start with. Well, first, we just need to start with the levels for the week and de facto have a little party for Stu. So go clap your hands, move around a little bit. Woohoo! All over. We'll have a little music playing here.
All right, we're
We
done.
said last week, where do you think oil is going to be? Oil is like $37. Do you think it's going to be above or below? I was bullish. Only up until a point. I don't say I thought it was going to be 45, but I did think we were going to end above 38. Stu was very bearish. Actually, that you thought it was going to be about $37. We're currently trading 35 even right now. Opened the week, like I said, all the way up at 30. We've just taken an absolute tumble. Three big, couple things happened last week that would happen, but I mean, really the driving factor of these depressing oil prices is the stuff coming out of OPEC and specifically in Libya in terms of oil production. We'll have Stu dive into that in a little bit. First, I mean, when we look at the levels here, I mean, we're diving now back into, really there's a gap that we've reached from 35 to 28. You got to remember, people, there was, we're running into what we call gap periods where oil, because it's rarely gets down this low, is so news driven, it tends to run quickly. So we're at now sort of a level in which there's not much volume between 35 and 28 to really give an indication of where it's going. And what's driving oil? Well, it's all of these news events right now. So you can kind of not throw the technicals out the window. Watch the news, guys. Virus continues to get worse. And I don't want to put that in quotes to say it's a scam, but if the media virus gets worse, yes, if cases continue to increase, yeah, it's not going to go on oil prices. I saw this weekend, gasoline distillate demand was up. Bulls like that a little bit, but then we hear Libya comes out, 800,000 barrels, as Stu's going to cover here. So watch yourself here. If you're actually wanting to get in it and maybe trade this, be short, don't be long, especially in this market. Now, it really depends on what time frame you're trading. You can always get long and 10 seconds, get out for a 10-second ride. I mean, that definitely can happen. So the key is pick your spots wisely. In terms of, on a weekly bias, I'm neutral. I think 30 to 30, I think 32 to 34, $35 is probably a pretty solid range for considering the glut of just global oil stocks that's happening right now. If I had to give you some big levels, well, 135.35 is a big level. There's a big chunk of volume there. 36.27, 37.48. Like I said, on the downside, it's tougher to read because it's just been really slick. I think 33, $32 is probably where you're going to see a floor on this. I just think that's more of a, that's 25% off the original index. When you talk about $40, bringing it down to that $32 range, that's about 25% Which means it's just because when you look at its demand has, I'm just trying to match that up with we're probably about to see another 25% dip of demand. So is it a 100% correlation? I don't know. A lot of this is news driven as well. So it'll be interesting to see what this is. But man, that's where I think some of the levels are. We move over to natural gas. You know, remember natural gas was, you look, $3.28. Wasn't it $3 last week? Yeah, we had a contract roll. So let's just remember that we our contract rolled from the November to the December contract. So that was good that was up at, we were trading at $3 even, pit open for the contract roll, $3.28. So really we're at $3.28 right now. It was $3.28 when it opened. So we were talking 0.2 of a penny change. Now we at one point got down to 3.15. At one point we were up to 3.4. So it's been a nice little roller coaster. But
my number.
What's up?
My number was 320 all along for that.
Yeah,
contract.
no, you had 320 a while ago, and you've been really spot on this stuff. And I think as we continue to roll, give you an example. 12-month strip's 313. Now, 12-month strip is never an indication really of what prices. They never react quick enough. So you can still be bullish and think we see $4 gas. I don't. I think this 3 to 330 level that we find ourselves in is probably going to be where we're at, because at some point companies can't just stop producing oil. At some point, the reason why these companies are merging is so they can create a well cost that is theoretically lower, keep lowering their average per barrel well cost. Now, does that mean that they're still burning capital like no other? Yes. But it just makes their slide deck look sweet. And that, at the end of the day, that's what it's what a lot of these companies are in for. They're in for sweet slide decking and a good segment on Kramer. So eventually people are gonna make that joke, and it's gonna be about the energy news beat segment they do, because we'll bring them on, but we'll ask them tough questions. We'll show the people at shit. We'll ask Michael Worth how his application for his new gig's coming. Have you gotten your application in yet? I still had to reapply. Yeah, he'd never come back. When we look at the big levels, obviously, this we're kind of in, I don't want to say uncharted territories, but we just haven't seen $3 gas or 330 gas in a while. So, point of control is 330 for the whole week. I think there's a big slick spot, or big chunk between 328 and 335. I think that's probably your peak, unless you see some of this weather stuff turn around. Let's pull up a weather forecast. I don't have it up on me, but let's get a weather forecast up here. Because that's going to see, here we go. A little too long for my natural gas. What's our weather supply here? Short-term weather outlook, October 30th through November 5th. A fresh cold shot will be pushing the Northeast today. Highs of the 30s and the 50s with chilly lows of the 10s and 30s. A quick break will follow Sunday before another cold shot arrives Monday, Tuesday with similar conditions. All right, so there we go. So Midwest, Northeast. I knew that. It was raining all day. If anyone watched Sunday Night Football, you knew that. Did you watch the game? Who won? Did Eagles win last night? It was Eagles-Cowboys. It was tough to watch. Are you Cowboys fans too?
I'm a Cowboys fan, but I don't watch the NFL.
Oh, that's fair. Do you know if they won yesterday? Because I'm pretty sure they got crushed. I watched like the first 4 or 5 drives, and then it was like, I don't really care about either of these teams. And I got to listen to Chris Collinsworth all night. I'm good.
No, I got my football fix with the Oklahoma State folks on Saturday.
Speaking of moment of silence.
Yeah.
How do you not beat Texas?
Well, you give up four turnovers. We were kind of stupid.
That's all right. It's all right. I was watching that at a buddy's. I was like, Stu's probably in the edge of his chair right now. And Texas, no less. They're having a bad year. So, short-term outlook. Looks like we've got Northeast is going to be cold. So, probably, I think those, you can see those crack spreads up there dive a little bit. Rest of the U.S., 50 to 80. Thank goodness. As the week progresses, 50 to 60 overall in the Northeast. Overall demand, this is nat gas weather. One of probably the top weather sources that traders go to, because they take all of those complex weather models and boil it down to what traders need. So if you're actually going to sit there and trade natural gas, one, don't. Two, if you're going to, get nat gas weather, go subscribe to Natural Gas Intelligence. It's going to cost you some bucks. Sorry, you chose it though. You heard it here first. Don't do it.
Step away from the natural gas.
Yeah. They got natural demand moderate to high Tuesday. So there you go. Probably a little bullish this week, but we'll see. LNG exports are going to continue to see lower production. I think it was, I saw this tweet. Let me pull it up. What's our natural gas? I saw it was the shut-in production. Here we go. 20% of all gas was shut in due to Hurricane Zeta. That's now moved off. About 44 platforms were evacuated. One rig was evacuated. 46% of oil was shut in. 20% of gas. So to kind of give you guys an idea, that's the percentage that's been ripped off the market due to Zeta. So when you're trying to price in these levels, remember that stuff's going to come back on. I don't know how much of it we'll see in either the EIA reports this week, but who knows? All right. We got to talk about Libya, Stu, because I mean the reason why oil is $34 is because of these guys. So break it down for us. What is Libya doing? Because we've seen this is the 4th or 5th update. This is Libya turning on more production version 4.0.
Exactly. And just to give our listeners a hair of a feedback for about 30 seconds, and that was Turkey was asked in when they were only doing 90,000 barrels a day about 6 months ago. And Turkey had its folks come in and they turned everything back on and they're going through everything. I got an article here and it came out over the weekend. We've been talking about 800,000 barrels per day. It went to 600, then it went to 800. More of the oil fields have been coming on in what they call the crescent.
Yep.
And this article is called Libya's oil production. Boy, there's a Texas way to talk. Surges 800,000 barrels per day, on the way to 1.2 million barrels per day. The article actually says it's going to be more than that, but I think it's going to be a little bit less because the intel I'm getting is that some of those lines are not going to be coming on. Here's the carrot.
Yeah, some of those lines are going to be stolen by Al Qaeda. Isn't that what they do?
I'm saying that they are, excuse me, I'm saying that they're going to come online this year.
Oh.
They're not going to be as much, and the rest of the world thinks they're coming on next year. So you heard it here first. They're coming online this year, and it's not going to be as much. Now, more will come on next year. So there's a little bit of a tidbit for you.
Okay, so because here's the interesting part. I mean, to give people an idea of why, Libya's only put 800,000 barrels on the market. We'll give you an idea. In September, their daily oil production was less than 100,000 barrels. In September, woohoo! That's turning the faucets on, turning them on hot.
They have some tankers sitting ready to fill.
They do. So, yeah, I mean, look, the National Oil Corps expects to pump 1 million barrels daily next month, with the ambition to reach 1.6 by the end of 2020. Now that hinges on the resources the finance ministry will be able to allocate. See, they all need capital, Stu. Just whether it's from the free market or whether it's from the government.
This goes back to about 16 of our other stories, and OPEC cannot keep them in control. And most of the oil is going to, and here's a drum roll, China. So you gotta love it.
I love it. I think, Stu, you have one more story in the international news, but I want to quickly highlight, I think, some of the findings from earnings last week. And, I don't want to spend too much time diving into all of them because, we cover them every single day on our energy news beat. But I think there's a couple themes that we're seeing. One, please don't read the press release. I'm just begging you, don't. Now you can do it, but you have to just, and I hate to say this because they're not frauds. I'm talking about press releases, not the people who write them, but what is the goal of a press release? How do we make this quarter look good? Well, that's not what you should be looking for if you're an investor. You should be saying, what is the data? I've seen now free cash outflow on an oil and gas slide deck. I'm not joking with you. Free cash outflow. And they touted that as a number. They touted that. They're like, oh, yeah, free cash outflow. Yeah.
Is that non-GAAP?
Oh, yeah, that's not GAAP, baby. What is it, that thing in the Bible? Man cannot live off bread alone. Oil companies cannot live off GAAP alone because they will die. They need that non-GAAP stuff. It's just crazy. So don't read the press release, please. Avoid it at all costs. When you see a company drop their earnings, go check out the 10Q. Go read the earnings transcript, then read the press release and see what version you like better. It's almost like, what news do you want? It's almost like the different news channels. So that's one. And I harp too much on press releases. They're just, know what their intention is for. Their intention is it's a press release from a company. Is a company going to make themselves look bad? No, not going to happen. Or should they? They shouldn't be in the business of making themselves look bad. But an investor shouldn't be in the business of believing everything that comes out of their mouths. That's the other thing. And that's what we do on the show. We protect you from bad investments, or at least we try to.
That's why they release at 5 o'clock on Friday.
Yeah. My second takeaway is, man, these banks are in a precarious position. Banks own so much of not just the RBL debt, not just the credit borrowing facilities, but also their components on the investment management side own huge numbers of the equity in these oil companies, who continue to spend more on dividends and CapEx, or what we call cash from. There are two lines that I care about in a 10Q. Cash from operations, which, if you can think about what that is, that's how much cash you bring in via all the stuff you're doing. And this is not including hedging, because that's a financial move. This isn't include, you know what I mean? So that's so when at cash from operations is every single little business that you're in. How much money is that bringing in? It's less than revenue, because revenue can include a lot of other things, partnerships, JVs, all this stuff. Cash from operations. That's what I like to see. Okay. And specifically on, non-super majors. You get a super major, I don't really care what ExxonMobil's, I do care, what their cash from operations, but they take into account, they have, so I'm getting to the point is, super majors cash from operations is important, but it's maybe only 60, 70% of the story. When you look at an oil company, cash from operations, it's 90, 95% of the money they make. I mean, they don't, I'm just picking, your average shale oil company, they're just producing oil. What else they got going on? It always cracks me up. You have these oil companies. What do? We produce oil and gas. You have a director of business development. What do you need a business development director for? You're not doing anything other than drilling oil. You know what I mean? It just cracks me up. It's like your entire business is based upon, so why do you need a director of business development? You want to start a podcast? It just cracks me up. So if I'm trying to word this correctly, because I don't want to, I guess the point of all this I'm trying to say is, cash from operations is one of the few stats that you can look at, and one of the few numbers you can look at to say, okay, how much money are they making from their core operations, from their, from all the different businesses they're in. The other line that I look at is cash from investing activities. That is how much money is going the opposite way. How much cash are you taking and investing in new things? And in all of the cases, cash from investing is greater than cash from operating. And you can't continue to live like that. I can't do that as a human for more than 10 months before the bank starts calling me. It's like, yeah, Mike, These guys can't do it for that much longer. And the burden, we talk about, well, who's the burden shifts to the banks, because it's not just one company that's in this position. It's, quite frankly, as we're going to cover here in a little bit, it's honestly the super majors. They're in the same issue too. Now they're dealing with the whole nother thing called the dividend, but they're in the same boat. Their cash from operations is less than cash from investing operations, or from cash from investing. And it also includes, investing includes G&A. You invest in your people. It includes everything. It includes CapEx. It includes OpEx. It includes G&A. So it's two really good numbers to just boom, let's minus them, see where they're at. The industry is doing a terrible job of managing that number. So that's my second takeaway, is that the banks are in a precarious position, and I think they know that. And partly, I think what's fascinating is to see the redeterminations be as light as it has been. Now, I don't know if that is because they're waiting just to whack them in the spring, if it's more of a kick the can down the road thing, and it can be. I mean, there was a story leaked last week. ExxonMobil's seeking to write down $30 billion of gas assets. Who did they buy in 2008 for $30 billion? XTO? I mean, yeah, and should they maybe have done this when gas was $1.50? Maybe. But what is, kick the can down the road? Next management team will deal with it. Next CEO will deal with it. Eventually, music stops playing. Someone's got to face it. And I think these banks are going to realize that, whether they're going to start doing that in spring. 2021 is going to be interesting, because oil prices may recover a little bit, but at some point we're going to run out of money to invest. We're going to run out of money to lend people. And I think these banks are going to be caught not with their tail between their legs, but in a precarious situation. They are in a precarious situation. If we cut their borrowing base, we cause this company to declare Chapter 11 bankruptcy, and we're wiped, and we recoup 20 cents on the dollar. If we keep their RBL the same, maybe in 10 months Exxon buys us and we recoup 60 cents on the dollar. I don't know. But these banks are in an interesting situation. I can't say it any clearer. So, 1, don't read the press release. 2, man, these banks, whether it's this redetermination season or next redetermination season, are going to have to, something's going to have to give here, because it's going to be very interesting. Stu, I don't know if you've seen anything from these earnings that have caught your eye.
I think you've pretty well covered it. The earnings are just, it's not the AK-47 you have to look at, it's the 10K.
Yeah, it is the 10K. So, all right. You have something on India.
I have a couple things out there. India, I am big on Prime Minister Modi. He has been power to the people. He has been using anything he possibly can to get power to the Indian folks. Just got a report this morning that their use of diesel fuel is up dramatically. That is pretty darn cool. But over the weekend, Prime Minister Modi has put a balanced of power, 7 key pillars of India's energy strategy, power to the people. He mentioned that India saved around 24,000 rubles, or whatever they are, through the installation of 11 million smart LED lights. So what he's doing is he is doing one of the single best jobs of any leader in the world of balancing power.
Mhm.
He is what I'm going to write my thesis on how to be a world leader.
I, I think that's awesome. I know you've been following this. You've been on this for a while, and so this isn't something that just came up.
Oh no. The second one, am I on the international news side here?
Yeah, let's hit the international news desk.
Um, I don't like talking politics because I don't like politicians. However, one of the funniest things is I want to talk about, for about 2 seconds, the view from the Middle East to President Biden and President Trump. I thought this tidbit was absolutely wonderful. It's an article that came out this morning, and I haven't put it out on the news desk yet because I'm still editing it.
Mhm.
The impression from the Middle East of U.S. politics is that Trump was proud of getting out of the Paris Peace Accord for
Mhm.
uh, pollution accord. However, people need to understand our CO2 and pollution output as an industrial nation is now the lowest out of anywhere else in the world. And the Paris Accord is absolutely um, taking advantage of the US and not enforcing it to China or anywhere else. Russia is the number one flaring company in
Mhm.
the world. They're still in it, but they're still polluting. So the other key takeaway in here was that um, U.S. oil producers and European and the world is watching if Biden gets elected, may re-engage with Iran, providing limited sanction reliefs and allowing its crude back on the market, which could drive prices down and in turn shut our oil producers
Mhm.
down. So a Biden election is going to be devastating, even though if they say they're not going to ban fracking, they're going to eliminate jobs like you wouldn't believe by giving Iran and giving no support to OPEC. That is
Huge,
from the Middle East.
huge.
That's not my opinion. That's which I agree with, but that is an opinion so that we're not thrown out of YouTube.
Whew.
That's from the Middle East. So I thought that was pretty darn interesting.
That is interesting, and um, that's this. I mean, this is stuff that is driving oil markets, guys. This stuff that is really factoring into how this whole oil thing is playing, and it's pretty unbelievable. Um, I've got a bunch of other things, but we're already here at 30, 35 minutes here. I want to try to keep these a little shorter. So Stu, I think there's a couple other things, you know, on the, I just recommend tune in to our energy news beat, available on YouTube. Subscribe, do whatever makes the algorithms go nuts. We're going to be covering all of the earnings this week. We're going to be covering all of the stories, what's going on with the oil price. I just highly recommend checking that out. But I think with that, guys, we're going to go and get out of here and let you guys start your day, get back to work. Thank you for checking out the 360 Digital Closmo Week Ahead podcast. For Stuart Turley, I'm Michael Tanner. We'll see you guys this afternoon for the Energy News Beat.